Hey, welcome everybody to 40 Finance Channel live stream. Just hopping on here a little bit before lunch in my neck of the woods in Cincinnati, Ohio. And I was just laughing to myself. The reason I got online is to me, it's just really weird, I guess is the word, in the market right now. I think some things make a lot of sense from a valuation perspective. Some things that I thought were trickling down to make sense have since shot back up. And I think that there's just a lot of different indicators going on around here. And to be 100% clear, I'm almost fully invested. I have a little bit, like a 10% off to the side, as I typically do, to be able to jump into awesome deals. So I'm not here to preach sell all your stocks or anything like that. I think you guys know that by now. I'm a long-term investor. I typically buy companies that I'm going to hold for years and years and years. The one exception, there was two exceptions to that this year when I sold out of Enphase and Unity, mostly because of the growth stock crash and the fact that I had bought near the top. But other than that, all my other holdings, the PayPals, the Visas, the Magnites and Palantirs, there's no incentive for me to get out of those. Excuse me. But what I just wanted to get together with you today is just kind of click around some of these things that are going on in the market, not necessarily all of them stocks, and just sort of talk about them and see what you guys think. So Kevin Hawthorne, good to see you. Thanks for joining in the chat and putting a message in there. I always appreciate that because sometimes it doesn't work. So thank you very much. Let me set up a screen for us. Do a better job of centering that so that we can see it. All right. So this is just Yahoo Finance, obviously. And if you look across the top ribbon, let me get back to, first let me refresh this and just make sure we got all the live stuff. So this is just today, right? What's going on today? S&P 500, up a little bit, Dow up a little bit, NASDAQ down a little bit, Russell. So call it flat for the day, right? You have oil has made its way up to $73, which I'm not a big commodities trader. I'm a zero commodities trader. But the price of oil is certainly going to start coming into play with transportation companies as well as industrials if this continues. Gold, gold hit did it hit $2,000 last year? I thought it did. Yeah, August of 2020, it hit $2,000, and now it's down to $1,760. And I'm just calling these things out. I'm not saying that they're good or bad. Silver, who many speculate with silver, has the potential to go certainly into the 30s, and some would say the 50s. On this one-year chart, peak of silver has been 29, and that's coming off of $15 or so back in 2019. Now this beast, the 10-year, I can't help but watch it every day because we see that on March 31st, it was almost 175, and now you're back down today, dropping 2% to 1.44. Let's try to get this up a little bit closer. Look at this 1 month, right? You were at 1.63% on June 1st. Now you're at 1.44%. So not a huge change, but I got to tell you, that's a pretty substantial change in an interest rate that is supposed to be going back up right now. So that is interesting. And then on the other side, we've had the Bitcoin volatility. We've had lumber prices, which, I don't trade lumber prices, but let's see if I can show you something about that. Lumber prices are back down, I think 40%. Random length lumber futures. Let's go with the 6-month chart. December of last year, 873. December of last year, okay? March 7th, you are double that. Or excuse me, May 7th, you were double that. That sort of coincides with when we saw the growth stock crash. No, crash is the wrong word, but you know what I mean. The prices tumbled. Now lumber at $766 is cheaper than it was back in December, although not the lowest of the year, which was $668. 1 year chart on lumber way back last year, it was in the 400s. So I don't know, all these things, they're different signals, and I'm not suggesting that one determines which way stock prices actually go. But what I am saying is we have a lot of market moving activity. And for me personally, that's what makes it really hard to choose a time to invest with your savings or your backup money because it just doesn't feel like with stocks, particularly some of the growth names, have bounced right back up to places that perhaps they fell from for good reason. And let's see what's hot today. Let's just take Shopify. I'm just gonna grab that one. I felt personally that Shopify, who definitely has a bright future, I felt personally, here's year to date, let's get year to date, that when Shopify was in this $1,000 range on May 13th, which ended up being the low, I felt that was almost appropriate for Shopify, if not a good deal. And, maybe you could argue in the 1100 range, there might be some argument there if you're going to hold long term, but now we're at $1,500. That coincides with February's high. And if you kind of recall for February, I think most of us felt that the stock market was too hot. So there's one right there. Let's take a look at Roku just since it's off to the side. Year to date, low 284, February high 469. Today you're at 438. So it's right there with the high. DocuSign. Let's get, year to date. DocuSign 264 around Valentine's Day. Now you've exceeded that. This is a stock with negative earnings. It does have good growth, but at what cost? Teladoc, bad example. Teladoc's way down. Let's try CrowdStrike was back there. CrowdStrike, great stock, one I would consider owning, certainly not at this multiple. February, Valentine's Day, 242. Today you're at 251. So, and there's dozens more. But if you were in February and you thought that the market was too hot, kind of like I did, then it went down in May to what I would argue is more reasonable levels for a lot of the growth names anyway. Borderline sale for some of the mega cap names. And now we're back up, in some cases, exceeding what we saw in February. I know companies have made more money between February and whatever this is, about to turn into July. However, that's a pretty massive fluctuation. And there's other things going on behind the scenes, right? There's Bitcoin volatility, talked about lumber. Interest rates are going literally the wrong way in terms of what they should be doing with economic recovery. So I don't know. To me, it's just a very confusing time. And with that being said, I'm holding, I'm not selling, and I'm also not buying. So I'm just going to leave it at that. That's a little intro soliloquy for the day. Saying hi to Kevin again. Ashwin, thank you for supporting the channel. Do you know when DD will IPO today from Screw College? I don't. Most of those IPOs typically come out after lunch between 1 p.m. and 2 p.m. So probably getting closer. Let's see if they've put any updates in Yahoo. I don't see it. Just going to do a quick search here for you. DD IPO. I don't see any new updates, so I was just looking at some of my stuff. Everything just says IPO today. So I would look between 1 and 2 o'clock if you're trying to get into that one. That's a Chinese stock, so typically for me with Chinese stocks, I go for an ETF that would feature them, just because I can't always predict which Chinese stocks are using GAAP accounting, and so I try to be careful there. Just asking, which one do you prefer, Shopify, Amazon, or Baba? That's a good one. I would say that I hold Amazon. So I guess I got to stick with that one. And I would probably Shopify, new position, current price of $1,500. I would prefer Amazon or Alibaba from a valuation perspective, but that's just a new purchase. So if you got in Shopify, I'd call it $700 at some point, I would still hold that stock. I think it has room to run, but if you're buying at today's prices, I would prefer Amazon or Alibaba at their current valuations. Sajad, another crash. Crash, I don't know. By definition, but I'm expecting another pullback event this year, and I don't think that that's like a crazy projection. I just think that here we are. We're right back to February highs. We're right back to NASDAQ all-time highs. So it can't go up in a straight line forever, and that's why I'm just saving money, and I'm looking to invest. I want to be in stocks. 3 to 5% correction does not spook me out of the stock market. If anything else, guys, if I'm just looking for an opportunity to buy, I don't necessarily see that right now, with the assumption that I'm buying today and I'm getting a good price that goes up over the next 6 months, I guess is what I'm getting at there. Hey, Geoff, are you familiar with Fibonacci retracement? Not 100%. So I am familiar with Fibonacci charting. I don't do a ton of technical analysis. I stick mostly to, if you guys have seen on the channel, sometimes I talk about 50-day, 200-day RSI. I eyeball those, and I'll do a quick example for mine. But Derek, let's see if you carried on. Derek, if you had something to share with it, I'm happy to look. But I just happened to land on Microsoft because I typed in Yahoo Finance, and let's go to their chart. Just to show you guys what I look at. This doesn't mean it's the best way of all time or anything like that. Let's try to squeeze this in. So this is custom set up for me. Not that it's very advanced, where you have RSI in the bottom and 50-day and 200-day, move it out 6 months or so, which I guess is basically year to date now. So I just picked Microsoft out of the blue, right? And I'll tell you what I see on just these three levels. I see a stock that is, first of all, at new all-time highs. I see a stock that's well over its 50-day. And I see an RSI of 70, which is not quite as high as we saw in April. I'll try to bring this up. Not quite as high as we saw in April. And certainly not, I wish this thing would hover over. Can't get it to hover over the February levels to really tell. But I do see from this simple chart, I see a stock that, in my opinion, has more risk to the downside if I'm trying to penny pinch on price, which I often do. So Microsoft for the long term, who's going to argue that, right? But it's pretty obvious what we're seeing. Microsoft is a very stable company, very predictable revenue, and yet they themselves have seen these hills, right? Rolling hills. And this is a positive over the long term. So Derek left a comment about DCA, dollar cost averaging. You know, the last low for Microsoft in May came at this point, looks like 242. The first low on the 6 month was 212. Then it was 226-ish, then 242. So what I would say, if anything else, is there'll be another hill, right? Microsoft will go through another hill. It probably won't be this low at 242, but, you know, could you get it at 248? Something like that. And that's what I would personally be looking to do in the ways that I look at stocks from a long-term perspective. Adding another or saving $10 to $20 depending on what volume you're buying at. For a stock like Microsoft, it gives you like that additional padding if the market turns south, right? So let's just pretend I bought Microsoft this year and my short-term initiative as a long-term investor is to not be negative, right? So in that case, I would, let's just say I target Microsoft at 250, right? And I got it, or I got it at 240 back in that May date. 242, I think, was the price. Now I'm at 270, I'm up, and that's okay. I'm not super pumped about the being up because I'm going to hold it for a long time. What I don't want in the next crash, event, whatever, is to go super negative. And I don't think I would, because at 270 minus 10% is about 27 bucks. So 270, that's like 243. And I think I said that I bought at 242 in May in this example I'm doing. So I would be basically down to par, right? I would be basically down to par, maybe a couple bucks underwater, but not by much, not by much. And that's the whole just way that I look at it. I don't want to be negative if at all possible in the journey. Sometimes it happens. Hopefully it's short-lived, but that's how I look at stuff. All right, calm me now. DD should be opening today. Not sure if it already did. I don't see it on Yahoo, but it could have come up. Derek, still dollar cost averaging. My minimum amount on a monthly basis, waiting for something to happen. That's probably you're smarter than me. Doing a minimum amount per month. I kind of like that idea, just to, you know, if anything else, just to get the anxiety and the FOMO out, is to just buy the minimum amount a month, and then if prices are down, have a maximum. So that's a good suggestion. Affirm big growth stock is down substantially. Did I cover Affirm recently on a video? All these new ones sound the same. No, it doesn't look like I did. I was doing Upstart. I did a video on Upstart. So Affirm is buy now, pay later, I believe. Let's double check. Digital mobile first commerce, point of sale solution, payments network, enables consumers to pay for a purchase over time, 1 to 48 months. All right, so here we go, year to date, February, 139. Now you're at 66. On the analysis side, obviously it's not profitable. You have the potential for 37% sales gain next year. That would take you from 831 to 1.15 billion. I'd have to read more about the company, but the only thing I don't like here with this, and there's another one just like it, that does buy now, pay later, I can't remember what it is the moat, right? Like, why does a firm have to do this versus, say, PayPal, which, by the way, has a buy now, pay later. Certainly, a credit card does the same thing. I would have to learn more about, what is their intellectual property, how is it different than somebody using buy now, pay later on PayPal or something similar. But, from a sheer valuation perspective, let me check something here. You got 23x price to sales. On the digital payment side, they're not really the same thing as PayPal, but I'm just going to take a quick look. PayPal is 15x price to sales. A firm will grow faster than PayPal because they're smaller. So maybe it's fair at this price. Kind of hard to tell, to be honest with you. I'd have to study more. But that would be my big call out for them is, you could have a hell of a 2-year run, and then somebody from a long-term perspective could launch the exact same product and win customers and pull from your base. I'm not sure. Maybe their product is that good that people want, all the e-commerce people want to use it. Pushpack, what do you think about OIH? Not sure. Oops, I mistyped. OIH. Oil services. I don't have any oil investments. I kind of wish I did some days, but I think you got room to run on this 5-year chart. Here's the obvious. Oh, that's 2020. So let's go to 2019 or so. It looks like there's still more room. I mean, we know that some aspects of oil are going to be declining, but on the same token, I still think we're underestimating or we're overestimating the demise of oil, to be honest with you. It looks like, I was trying to see what their dividend was if they had one, but maybe they don't. Anyhow, I don't think it's a bad place to be, quite honestly. I mean, the growth story is probably limited. However, the back to par story, I think, is still ongoing. And I think from an oil, my basic understanding of oil is obviously it's very transportation related. And we're not up to 100% transportation internationally. No way. I mean, we probably have some good volume in airplanes right now. But when you start to factor in buses, consumer cars, trucking/transportation, business meetings, all those things, I can't imagine we're anywhere near par for oil consumption, and that would obviously could be a very good thing for that ETF. Derek, on the Fibonacci, just gives me another indicator. I don't live and die with it. It could tell me 75% chance we go down, 25 we go up, all short term. I might sneeze here. Sorry, guys. So good. That's a good tip from Derek. And yeah, I think the more stuff that you like to look at, the better. The way I look at that chart is probably the same as you use Fibonacci for, the one chart that I gave. But yeah, it's just looking like, hey, is this peak volume for some of these stocks? Do I see another potential run in the short term? And that's all. I think Derek and I are on the same page. It's like, do I buy now or wait for potentially a better deal? And that's where some of that chart stuff comes into play. Airlines, AAL, UAL on sale. I was looking at the airlines on a different chart yesterday, not one that I typically invest in, but let's look at this for a second. UAL. And they're down. And they're actually down, not a ton, but when the great travel rush came on, which looked like to be about March 17th or so, they went up to 62. Now you're down to 52. A little bounce back today. Let's take a look at another. Southwest used to have the best balance sheet. I'm not sure if they still do, but where was their high? Their high was April 7th. I'm also, just for fun, going to throw in Expedia, which is a stock I do watch. I realize it's not an airline, but here's where travel, March 17th. Travel really hit this uptick. Let's check on Marriott. And it is sliding down from those highs. Marriott, their high was Feb 24, it looks like, but they had a March 17th. And you can see that they melted down. I don't know if I would say it's on sale. What was the other airline you had? AAL. I don't look at the chart and say super sale. They had June 2nd for a high. Where was their March 17th? 25. So you've melted down some. You have to wonder, though, did it melt down enough? Because when the travel stocks went hot, remember, somewhere in here, Valentine's Day, we lost all momentum from growth stocks, and most of them went backwards. Everybody ran into the travel stocks and pushed those up to highs. Now you're seeing some weakness in travel. I don't know. I'd get probably greedy given these numbers. You're making your way. It's still a losing venture this year. Potentially EPS profitable next year if things keep going up. I think that you're going to get a couple bad news headlines on travel. Not the bad news that we're used to with the pandemic, but I think what we're going to see from travel stocks, including airlines, in my personal opinion, is we're going to see that the super circus numbers that everyone expects aren't going to happen as quickly as people expect them to. So a big component of travel and airlines is business travel. So this consumer travel that we have right now, that was the easy pickings, right? Because that's everybody doing one trip, two trips, etc. The business travel to and from New York City, all that stuff, international, business folks taking the trip to China to see how their factory's doing. Like, we're not there yet. So I think the stocks went up to this high of perfect world, and now they're melting down. If you're interested in getting in the airlines, I personally would wait for a red day at the absolute bare minimum. My 2 cents. Do you know about CLDR? Not off the top of my head, I don't. Cloudera. Small cap, $4 billion. Year to date, 1 year. How long has it been around? May 17th. of May of 2017. IPO'd at 20. Looks like it hit a low on June 19th or June 2019. Now you're at 1576. So this one's been on the market a while. Certainly enough to have some stats. We've got maybe not profitable, but let's just pretend forward PE at 41. Historically, it's been offered lower than that. Daggone quarterly. Historically, it's been offered lower than that at 33. However, it did have a 90 in 2020. Price to sales, which is going to be a little bit more reliable. Yeah, you're still, I would say, maybe fair valued compared to prices it's been offered at in the past. Year ago, EPS 45 cents, taking a dip this year by 3 cents. Next year, they'll make some progress at 51. And this is probably your biggest problem for a cloud stock. So cloud stock equals big expectations, single digit revenue projections, not good. Give me another cloud stock. Like, well, we talked, it's different, but we talked about CrowdStrike, which is more like security, I get it. But look at these growth numbers. 56% and 36%, okay? So that's that kind of like cloud world. Here's Cloudflare. Revenue projections, 42%, 32%. Granted, both of these stocks are more expensive from a valuation perspective. So that's my take, though, on Cloudera is you need to have a thesis that Cloudera grows at a more reasonable cloud pace, right? The pace for a cloud company, the expectation for a cloud company in this day and age, I would say, is a minimum of 15% a year on the revenue side, and then making progress on the EPS side. All right. I like oil more than airlines. Tom Brady, I could see that. I mean, I think it's a better spread your bet type thing, right? Like oil is used across a million things. Airlines are airlines. The fall season for airlines and travel is going to be so interesting. Here in America, fall is a huge conference time. So conferences in general run on almost like a school calendar, right? Because families have so much to do. There's not a lot of conferences and conventions in the summer because every family's taking a vacation. It's very hard to get all the people in one place. But as soon as you kick into, call it September 1st, all the way through the holidays, mid-December, huge business meetings, conventions, business travel. What will we see this year? That's going to be the question. As a Visa stockholder, I am assuming much better this year, but even I'm not projecting 110% of 2019 levels. That's absurd. Let's bring it down. It's probably, if we're lucky, business travel gets to 70% of 2019. That's just my guess. Then you look ahead to spring, you got your holiday break, somewhere in the neighborhood of Jan 15 through May 15 is going to be your spring business travel season, which would obviously fall in 2022. It's going to be our next litmus test. And I would say summer of 2022 is going to be your international travel litmus test, a true one. Hopefully by that point there is no COVID hotspots. So travel, you know, the market hits these momentum cycles to get excited about things. The process of making billions of dollars, right? Billions of dollars is what the travel industry is. That doesn't happen in a week. It doesn't happen in a day, right? It takes forever. Marriott, let's just look at them, not from a stock perspective, but I'm just curious what their revenues have been. Sorry, let me flip this over. Marriott, last 12 months, 1.7 billion. Actually, I'm going to go to Seeking Alpha because they have a really cool revenue chart. It's going to help us out a lot. Earnings. All right, here we go. That's EPS. Where are revenue? Earnings summary. Might be this one. Sorry for the delay. This is revenue estimates. I wish I could see historical, but who cares? December of 2021, the estimate is 13 billion. Next year, 18 billion, 21 and 23. So you see the big year-over-year growth cycle, right? Marriott historically does not grow at 25%, 40%. They don't grow at double digits a year, right? It's a monster company. So this is what I would say normal, you know, somewhere in the neighborhood of 4 to 8%. But this gives you the idea of like how long it's going to take to get to par. They're saying 2023, basically. That's essentially what this chart says. And the reason I came over here is to say, you know, $21 billion for Marriott, which they only have so many like hotels that they actually own anymore. I mean, it's basically like a hotel management company that's franchised and all that stuff. It takes a long time to make $21 billion selling individual hotel rooms and conventions. So when you see momentum swings in sectors, there's like this feeling that the money is just pouring in there, and it might be, but it takes a lot longer than you think to post those results. Derek just got back from CVG. Absolutely. So CVG is our airport here in Cincinnati. Funny enough, it is in northern Kentucky, which is a short drive. Had to wait an hour on the runway just to taxi us into the gate after we landed. That's nuts. And this is Cincinnati, Ohio. He's not talking about LaGuardia. So interesting experience. What entry levels on BA, Airbnb, and Disney for the long term? Selling puts at levels comfortable being assigned. So Disney would be the closest that I would probably talk about. And Disney's another one. Outside of streaming, Disney Parks revenue will take longer than most people on the street think. Don't forget, you have increased cost with operating the parks in this environment. Not to mention, we have wage increases. There are additional costs in companies that often get overlooked when we're talking about revenue growth. All right, so Disney. Here we are today. This is your 1 year chart, 175. Oh, look at when they were March 15th on their high, aka travel stock. They are under the 50-day year to date. So they're under their 50-day at 175. This is where it was absurd. I mean, you could make the argument that this isn't the worst time to buy it right now. Where was your peak RSI? Was around 70 in February. You melted down to the low on 5/19 when everything else was crashing. You had an RSI in the 20s. Now you're at 47. Value perspective, I would want Disney lower. Chart perspective, maybe you can get into the 160s, but this chart suggests that there's some support here, I guess is what I'm trying to say. If I was going to go like straight up valuation, like I normally do, sorry, clicked away. Here's the truth about Disney stock. Sounds like a headline. Forward PE of 36, PEG ratio of 1, right? So that gives us some idea. 2019, the forward PE was lower, so you could maybe say overvalued, but this PEG ratio, price to earnings growth, is actually pretty low compared to historical times. So yeah, man, you're starting to get in this situation with Disney that maybe 169, 165 hold for long term. That's not too bad, and that's getting arguably greedy. But we did have the recent run up. Yeah, I'll say 169. Hold it for 5 years, and you're not in the worst place of all time. Then you asked about, was Boeing in there? Airbnb is tough. Airbnb is tough. What I would tell you about Airbnb, in my opinion, as a growth stock, as a hot hyper growth stock, I think you're looking for, how low can it go? So here's your market crash, and that was 137. Today you're at 149. There's a lot of risk to the downside in this one. A lot of risk. The concept that it would ever be 209 again, as it was in the peak of the travel boom on 315, I don't know that. I can't say that would make sense for me in 2021. But if I had to buy Airbnb tomorrow, I would probably, man, I don't know. I'll be honest with you, this would be a stock that I'd like about $100. And then maybe I'm kicking it around. But if you want to be reasonable, maybe you're trying to get it in 130 land, 125. But you need to hold this one for a while because there's no profits there. You asked about Boeing, which is a stock I don't invest in, but I watch quite a bit. Don't forget on Boeing, I'll show you the analysis. You still are a year away from profitability, probably. You got one analyst here at 60 cents. You are 35% up in revenue this year, projected double digits next year. From a chart perspective, what are we at? So barely under 50-day. The 200's moving up. RSI in the 40s. You got to start to say that this looks dead on Disney, doesn't it? I think Disney's RSI was in the 40s. So, God, they just had something bad come out, didn't they? I thought Boeing got another ban or limit, but I don't see it. Boeing gets huge max orders, so that's huge. Maybe I'm wrong about that. Huge order, huge order. Boeing falls as FAA won't certify 77X jet until 2023. So that's a delay. Maybe that's not as bad as pulling it out of the sky. But yeah, I mean, historically, Boeing's been a good company for decades. And if you like this one, it's probably not going to sink a ton from here. And, just pick your spots and average down. I think you have a good chance of averaging down from 240, but it's going to be different because it's based on industrial orders. And every time you see these headlines come out that say Boeing gets huge order for 50 planes, I would just buy average down on a company like Boeing. And hopefully, all intents and purposes, you should wake up 2 years with a decent gain on the company just getting back to par. Not to mention, are they still doing dividends in all this crazy world? Let me double check. No dividend right now. I assume that will return at some point. All right. GHVI, it will be Matterport. I looked at those cameras, because I think Meet Kevin was doing that. He said it popped today, 13%. I like it. I like the concept. I can't figure out the mode of it. I think that the cameras and their little ecosystem, I was intrigued by it too. This is a SPAC that will turn into Matterport, debuted at 12, now you're at 16. I've been kind of stuck on my IPO SPACs. I hit on DraftKings, but you know, Rocket's been a lazy bum, and then PaySafe's sort of been wallowing too. I'm going to hold those for the long term, or certainly at least until I get some sort of positive return out of them. So I don't think I could go Matterport right now, because I think that there's more value in large and mega caps for immediate returns. However, they have a really cool ecosystem, and when I did the research for myself 5-6 months ago, so they sell these 3D cameras that basically allow you to take a 3D view of a house, you know, think real estate agent, but then the software to process the images, if I remember, is intellectual property, and you can't take the Matterport images and just throw them on a PC. You got to use their software, and there were some other things. They did a pretty good job of keeping the cows in the gate, right, so to speak. So that'll be an interesting one to watch. Would you buy short squeeze stocks? No. I have one on accident, which is Smile Direct Club. And with that, I don't plan on selling. What happened to my TV? My TV turned off. Oh well. That's for your guys' entertainment, you know, instead of looking at me the whole time. But long story short, SDC is short, as well as Rocket in terms of percentage of float. Let's see if that still shows up. But I am not actively looking for shorted stocks. So here's SDC, short percentage of float, 29%. That is not something I was looking for. It's nice if it breaks out. I guess it's an added bonus, and the way SDC has disappointed me recently on their revenue and acquisition, I can say that if they do turn things around, it could lead to a nice run-up. Rocket here, they're only 10% short of float. That's not huge. So no, I wouldn't ever buy a stock because of that. Looking at Apple, for pushback, I'll do a quick Apple. Apple's always interesting. I like to watch Apple stock. I don't own it, but it goes through some crazy ebbs and flows. For a company that makes as much money as they do, it's just funny how it gets in these market cycles. So let's go 1 year. It's certainly been a good investment over a year. 7/1/20, you're at 91. Today you're at 136. And what you can see from Apple, and right now your RSI is at 70. So I would say getting hot, right, over the 50-day moving average, over are nearing the peak of RSI, right? I would say not a good entry point. And I believe the historical valuation is stretched. But let me double check that. So this is annual. Did I forget to put this stupid thing on? Sorry, guys. I did forget to do the chart. Let's do historical first. So current forward PE of 25, current forward PEG of 2. Last year, that's cheaper than last year, which is a good sign. However, you go back to 2018, you go back to 17, you know, there was times to get it for slightly cheaper. And then let me show you the chart. I forgot to switch the little thing over. This is 1 year. There's the high RSI. There's over the 50-day. I think you can wait for a dip on Apple. But this is what Apple does. It goes on these roller coasters, right? New iPhone's coming, new 5G, something stupid. It goes up here, and then they'll have an earnings call, and they'll do very, very, very well on their earnings call, but they won't have the next new iPhone, so it'll go blah, 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 blah down here, and then it'll be like, oh, new, iPad headphones, great. And then people realize, well, that doesn't really matter for a bazillion-dollar company. So Apple, you should, I don't think it's a bad long-term investment. How could you argue it? But I would never buy Apple on a green day. Never. If I was an Apple investor. It just has too many news things. It's going up, right? The road is always going to have waves, and so always buy Apple down. Always buy Apple red. Always buy Apple when somebody says chip shortage, no iPhones coming for Christmas. That's when you buy Apple, because 99% of the time those headlines prove to be false. So hope that helps. Guys, I do have to run. I really appreciate everybody coming out for the live stream. I'll try to do some more, maybe even tomorrow, because I'm going to take Friday off. So hope you guys are doing great. Thanks for joining. We'll see you on the next one.